major gold mine contributed to a weak first quarter performance. Business and consumer confidence continue to weigh on the near-term growth forecast. Recent monthly inflation outcomes have remained around the midpoint of the inflation target range, in part due to weak demand and positive inflation data surprises. The medium-term inflation outlook has moderated slightly. The year-on-year inflation rate, as measured by the Consumer Price Index for all urban areas, was 4.4% in April. Goods price inflation was 4.2%, while services price inflation was 4.6%. The bank's measure of core inflation, which excludes food, fuel, and electricity, was 4.1% in April. Producer price inflation for final manufactured goods increased to 6.2% in March. The inflation forecast generated by the SAP's quarterly projection model, the QPM, has improved since the previous MPC. Headline inflation is expected to average 4.5% in 2019, increasing to 5.1% in 2020, and moderating to 4.6% in 2021. Headline CPI inflation is expected to peak at 5.5% in the first quarter of 2020 and settle at 4.5% in the last 2 quarters of 2021. The main drivers of the inflation forecast are a lower starting point for food and services inflation and the revised oil price assumptions. Food price inflation is now expected to average 3.7% in 2019. The assumptions for Brent crude oil in the QPM were revised up from $64 to just under $70 for 2019. The assumptions for 2020 and 2021 were also revised up from $65 to $68. Moderation in rental prices, unit labor costs, and inflation expectations also contribute to lower core inflation over the medium term. The forecast for core inflation is lower at 4.5% in 2019, 4.8% in 2020, and 4.5% in 2021. Average inflation expectations have been declining slowly since the end of 2017. The inflation expectations of market analysts in the May 2019 Reuters Econometer survey were unchanged at 4.7% for 2019, while expectations edged down to 5.2% for 2020 and 5% for 2021. Market-based expectations implicit in the break-even inflation rates remain sensitive to exchange rate movements. Since our last meeting, 5-year break-even rates increased to 5.1% and 10-year break-even rates were unchanged at 5.8%. The next BER inflation expectations survey will be published in July. Global GDP is expected to average 3.3% in 2019 and stabilize around 3.5% from 2020. While global economic activity remains moderate overall, growth momentum has slowed somewhat and there are many risks. Trade tensions have escalated between the United States and China, weighing on market confidence. Further tariff increases could disrupt global value chains and further reduce global trade. The IMF April 2019 World Economic Outlook estimates that tariff increases could subtract as much as 0.8 percentage points from global growth. Much uncertainty remains around Brexit, alongside other geopolitical developments. In some countries, there also remain significant financial vulnerabilities associated with elevated private and public debt. Inflation in most advanced economies remain below targeted levels, allowing major central banks space to put monetary policy normalization on hold. However, the risk of a renewed tightening of financial conditions should not be underestimated. The performance of emerging market currencies was mixed, reflecting a combination of changes in investor sentiment, easier monetary conditions in major economies, and country-specific factors. Currencies of countries with stronger macroeconomic fundamentals remain better placed to benefit from these developments. The rand has benefited from improved sentiment towards riskier assets, but will continue to be affected by idiosyncratic factors such as domestic growth prospects and policy settings. Since the March MPC, the rand has appreciated by 1.5% against the US dollar, by 2.5% against the euro, and by 3.1% on a trade-weighted basis. The implied starting point for the rand is 14 rands 40 against the US dollar, compared with 14 rands at the time of the previous meeting. At these levels, the QPM assesses the rand to be slightly undervalued. Based on recent short-term indicators and negative growth in mining and manufacturing, GDP is expected to contract in the first quarter of 2019. The disappointing data outcomes partly reflect supply-side constraints due to load shedding and a strike at a major gold mine. Fixed capital formation and household consumption expenditure also remain weak. The ABSA Purchasing Managers Index has recovered to 47.2 index points, remaining below the neutral level. The SAPS Composite Leading Business Cycle Indicator has trended lower since March 2018 and decreased further by 0.4% in March 2019. The SAP now expects GDP growth for 2019 to average 1%. The forecast for 2020 and 2021 was unchanged at 1.8% and 2% respectively. The near-term growth outlook is limited by the larger than expected slowdown in the first quarter, weak business and consumer confidence, as well as growing pressure on household disposable income. Real fixed investment is now forecast to contract by 0.3% in 2019, while household consumption expenditure will rise by a modest 1%. The MPC assesses the risks to the growth forecast to be on the downside. Weak business confidence, possible electricity supply constraints, and high debt levels in certain state-owned enterprises will continue to limit investment prospects. The escalation of trade tensions could significantly impact global trade, with likely negative impacts for South Africa as a small, open economy. The committee remains of the view that current challenges facing the economy are primarily structural in nature and cannot be resolved by monetary policy alone. It is now even more urgent to have a combination of prudent macroeconomic policies and structural reforms that raise potential growth and lower the cost structure of the economy. The MPC welcomes the continued downward trend in recent inflation outcomes and the moderation in inflation expectations. These are positive developments, as the committee would like to see inflation remain close to the midpoint of the inflation target range on a more sustained basis. The overall risks to the inflation outlook are assessed to be more or less evenly balanced. While there is scope for further moderation in meat and services prices, oil prices are expected to remain elevated and global food prices appear to have bottomed out. Electricity and water prices, amongst other administered prices, present additional upside risk. Against this backdrop, the MPC decided to keep the repurchase rate unchanged at 6.75% per year. 3 members preferred to keep rates on hold, and 2 members preferred a cut of 25 basis points. The committee assesses the stance of monetary policy to be broadly accommodative over the forecast period. Any future policy adjustments will continue to be data dependent. The implied path of policy rates generated by the quarterly projection model is for 1 cut of 25 basis points to the repo rate by the end of the first quarter of 2020. The endogenous interest rate path is built into the growth and inflation forecast. As emphasized previously, the implied path remains a broad policy guide which could change in either direction from meeting to meeting in response to new developments and changing risks. And that concludes our statement. But before I take your questions, because there is a question that has been consistently asked, when are you feeling the other position on the MPC? And today we would like to announce that Dr. Chris Lowald, who is the deputy head of the Economic Research and Statistics Department in the bank and head of research in that same department, will join the MPC with effect from the 1st of June for a period of 3 years. So, let us turn now to your questions. Ma'am, and you, sir.
Governor, it's...
And as usual, you identify your name and the media house you represent.
Governor, it's Pranesh Naidu from Bloomberg News. On the subject of the MPC, my first question I'm directing to Deputy Governor Manele. Deputy Governor,
no, you direct the questions to me, I will decide who must answer.
Well, if you would be so kind as to allow him to answer my question. Deputy Governor, is this your last MPC? Are you going to be available for the position beyond June when your current term expires? Have you told the President that you would be available to serve as Deputy Governor for another term? Got a couple more questions. Given yesterday's inflation print, we are seeing we're seeing on the consumer side demand very weak. In light of that, how does keeping the interest rate relatively high at 6.75% contain inflation or control inflation? And also, there was a note by Bank of America analysts recently who raised concerns about the adequacy of the Reserve Bank's forex reserves in light of the growing size of government's other FX liabilities, and I just wanted to get your take on those reserves, the size of those reserves. Thank you.
Thank you. That was a plateful. Sir.
Tsego Mugabudi from Bloomberg News. Good afternoon, Governor.
Tsego.
Yes. I just wanted to get your thoughts on the likelihood of a technical recession in 2019, seeing that you've mentioned the economy will likely contract in the first quarter of 2019. Thank you.
One more.
Okay.
Sir.
So, Governor, since you mentioned, it's Lucanio Mnyanda from Business Day. Since you mentioned the MPC, I thought I would ask if there's any developments regarding the Deputy Governor slot that's still open. Thank you.
Okay. The DG slot and the renewal of the term, we'll deal with those since once we have dealt with the content of the the statement. Yes, inflation is contained, but you see, Prinashi, yesterday's inflation doesn't help me. There is nothing I can do about yesterday's inflation. There is something I can do about future inflation, and that is the focus of policy. We have put our projections for inflation over the next 2 years, and within those, the QPM has also built in the possibility of a 25 basis points reduction in the repo rate in the first quarter of 2020. And so you are saying yesterday's inflation, I'm saying to you, yesterday's inflation is not going to help. It might help us with the starting point, that we have got a lower starting point, but for the purpose of policy, what matters is what future inflation is going to look like. Tsego, well, this links back to Tsego's question, which says that, is there a likelihood of a technical recession? Well, probabilities, I cannot judge a probability. It might not happen. What is important is that we are forecasting growth of 1% this year, which is a revision from the 1.3% that we had at the time of the previous meeting. So we will continue to watch the data, but our baseline scenario is that 1% this year. Adequacy of reserves, you can use so many measures to try and establish the adequacy of reserves. We do not think that you can characterize South African reserves as inadequate. We could do well with reserves that are slightly higher than what we have. The measure that is normally or conventionally used is whether your reserves cover 6 months of imports, and we are just about there in terms of that cover. But there are other measures, and the other measures are whether your reserves are able to cover your short-term debt and any debt that matures within the next 12 months, the so-called Guidotti rule. And based on that, that fluctuates quite a bit, because in there you would also then take account of the current account deficit. But intellectually, you've got to ask yourself, for a country that has got a policy of a floating exchange rate, do you really need massive reserves if you have got a floating and exchange rate which could thus absorb any shocks that might actually be coming through? I've not seen the particular research that you had referred to, but in some instances when people do these measures, and because they must take account of foreign debt, they include all of South Africa's foreign debt, and they forget that a big portion actually of South Africa's foreign debt is denominated in domestic currency, which means that if there is a flight of capital or there is a reversal of flows, the costs from any depreciation that might come as a result of that are borne by the holders of those bonds rather than borne by the fiscals. And it's a very important component of the argument. And the world over, there are many emerging markets which have taken a particular focus to develop domestic capital markets so that they could actually attract foreigners into their domestic market, so that they are not exposed to the swings in the exchange rate. So that is how we think about the reserves. Are there any other questions before I go back to the non-MPC questions? Sir, and you, and then you in the middle row, and you, ma'am.
This is a non-MPC question, Governor. My name is Kalani Bango from Power FM. I'm interested in the fact that yesterday we had the new administration that was actually sworn in and fresh, but it was old issues within the Reserve Bank. And it's needs that you also spoke about and I invited to speak about at the PSM Institute when it comes to the actual independence of the Reserve Bank. You gave a lot of, interesting scenarios about Cyprus and Greece and other countries and what's happened there. How would you wish for the sixth administration, those who are there occupying the union buildings, now to give you certainty, if that's what you need, about this question of the independence of the Reserve Bank? Is it an issue that for the sixth administration you think should be top of agenda?
Okay, sir.
Thank you, Governor. John McCoy from Bloomberg News. Can you discuss how significant was Eskom's load shedding causing a expected contraction in the economy in the first quarter?
Sorry about that. Just to repeat, John McCrory, Bloomberg News. Could you discuss how significant was Eskom and its load shedding to the expectation that the economy shrank in the first quarter, and how much of a weight will it be on economic growth for the rest of the year?
Thank you, Governor. I'm Farron Collins from Newsroom Africa Channel 405 on DSTV. I'm wanting to know from the Governor, is the Reserve Bank expecting government to adopt austerity measures, or do you see government adopting expansion measures going forward, and could that lead to a default on debt? We've also seen that unemployment figures have risen, and I'd like to know if the continuing trade war with America continues and commodities continue to fall in South Africa, and jobs become the question on jobs increases. Will the MPC relook at the interest rate then as well?
Ma'am? Is that the question? Yeah, he asked it. Which one? This last one that says, which trade you?
No, I wanted to ask, how severe has the trade war between China and America been to the South African economy, and should both parties not yield, what do you see happening?
Okay. John, the question of load shedding had been significant. It impacts on the energy intensive sectors, but it also has an energy intensive sectors the impact will be more pronounced, but it does also affect the others. Without a doubt, we know that both manufacturing and mining are energy intensive, and the figures that we have seen from the first quarter reflect that the two sectors actually contracted. In the case of mining, like we said, you can't locate it solely with load shedding. There was the strike that we had talked about. And we actually think that going forward, it is still a risk that if load shedding sets in, that it could affect growth negatively. But we also have to bear in mind that what we have seen with load shedding is that it also fits itself into business and consumer confidence, and we have seen that business and consumer confidence had been at historic lows, and without a doubt, when you have low business and consumer confidence, it affects investment and it affects household consumption expenditure and the lot, and so without a doubt that is the impact, and we hope that Eskom and government will find a solution to the energy supply challenge, and so that we could lay the basis for the investment drive. The thing about uncertainty about future energy supply also affects future investments, not just the current. And if you are to invest and you are not sure whether you will have energy going forward, that could actually affect your investment decisions. You might end up scaling down the investments or not making the investment at all. If we are from Newsroom Africa, is government going to embark on austerity program? Wrong press conference. They are down the road. No. If you ask the Minister of Finance whether he expects the Reserve Bank to do something, he will refer you here. So I will also refer you to him to say whether there is any austerity measures that they might have to embark. Trade wars. There are no winners in a trade war. No winners. And the global economy will suffer as a result of these trade wars. And it indicated that everyone is focused and is looking on just China and the US, but both economies are interconnected with so many other economies around the globe. And as such, the IMF made this work, which was in the World Economic Outlook in April, which showed that just based on the current tariffs that had been imposed, that it would shave off 0.8% from global growth. And since the IMF published that figure, we have not had less tariffs. Actually, there had been an announcement of further tariffs to come. And with that happening, it would impact on the global economy. And South Africa, as a small, open economy, which grows that by selling into the global demand, will be affected alongside many other emerging markets. But let's get it clear. Both the US and China would also be affected by those trade wars, which is where I had moved from, that there are no winners in a trade war. I think that fundamentally one thing that you've got to also bear in mind is that people are taking these stances and they say that they are protecting their own producers. But in a way, protectionism is sort of like silly. You want to protect your market. You do not want other countries to have access to your market, but you want access to other countries' markets. It's illogical. And constantly we've been making this point that there can't be winners and the world economy will just suffer as a result of this. Are there any other questions? I will come there because I'm not sure that we have journalists there. Lucanio?
So, Governor, can I just follow up on John's story about ESCOM? We've been talking about ESCOM in terms of load shedding, but since then there's been a lot of talk about in terms of the finances, about people are questioning it's actually sustainability that is going concern status. Have you done any sort of like research or any kind of stress testing what would happen if actually the worst were to happen with ESCOM? What would it mean for the economy? What would it mean for interest rates and inflation? And secondly, on the rates outlook, I mean, it seems like you've made a very convincing argument for cutting rates, and I'm just wondering what was the argument for not acting now?
Siyanda?
4 questions, Governor, from analysts. Nuno Camara from Kiko's World. What is the role of the monetary policy in a world where growth is being affected by political uncertainty? Peter Montalto. Can you please comment more on CPI for services, which has declined fast in the last few months? The SAB has previously said it had a strong link to expectations. How are you viewing it? Ashok Bundai from Autonomy Capital. Please, can Governor tell us why the SAB has repeatedly over-predicted inflation over the last 3 years? The last one is from Rahman Ahmed from Paro Management. What is your estimate for FX pass-through on inflation? In what range does it fluctuate? And is the response asymmetric between appreciation and depreciation of the rand? Thank you, Governor.
Thank you. Are there any other questions in the room? Yes, sir.
Governor, you said that the MPC was split 3-2 on the decision to keep the rate. What were some of the key points that you weren't agreed on? And also, the GDP forecast of 1% is slightly higher than most experts who predict GDP growth of under 1% for the rest of the year. Can you explain, maybe just elaborate a bit more on why you've gone with 1%?
Okay. Impact of Eskom Lucanyo. We have looked at this before. I think that with respect to growth, we can't say this is the impact of Eskom on growth. What we can say is what the impact of load shedding is on growth, and I think that we have dealt with that. It is a drag. It is a drag on growth. The estimates are a little bit of a difficult ones to do because different businesses get affected differently. And when you have load shedding scheduled, businesses are able to plan their affairs based on the schedule. And for as long as you adhere to the schedule, you may find that many businesses are actually able to cope with that. The problem would be if load shedding was unexpected, because then businesses cannot plan their activities. The finances are a different ball game. And we had raised the issue of finances as what would a default of Eskom mean for the financial sector. And we stress tested these things, and the exposure of the financial sector to Eskom showed that the sector will be able to withstand this. And it is a function of how Eskom is funded. Eskom is funded through the issuing of bonds rather than direct bank lending. And with that issuance of bonds, then the thing spreads. Who owns the bonds? Then you are into insurance companies and you are into pension funds. And it is that connectedness then that you start to worry about. So those are the channels that we would look at and say that would be the impact of Eskom finances on the sector. Suffice to say, though, that this is just a scenario. Eskom has not defaulted, so let's just get that. You asked the question of why didn't you just act now? I could do two questions, two answers for you. I could say to you, a lazy answer would say, well, according to our model, the cut is only required in the first quarter of next year, okay? But that is just a guideline. It's not the thing. I think that what we are clear about is that we would like to see data that tells us which way we should actually be adjusting policy, we continue to be data dependent, and in our own forecast, remember, inflation is still peaking at 5.1 in the first quarter of next year, but going forward, it comes down back towards the 4.5%, which is where we would like to see it. So, in the deliberations that we would have, we would then look at what is the case that policy stays the same, what will be the case that policy changes in either direction. And in all instances, it is influenced by what we foresee going forward. In other words, what is our forecast for growth and what is our forecast for inflation? Because the policy horizon is between 18 and 24 months, which then means that when you take a policy stance, you take a policy stance in order to affect the variables over that policy horizon. There was a question about what is the role of monetary policy in the context of political uncertainty. Well, monetary policy does not influence politics, and in our deliberations about the monetary policy stance, we do not bring politics in, which is why we have economists and not political scientists in our committee. Peter Montaldo asked the question about services inflation. Yes, services inflation does have a very strong influence on inflation expectations. The outcomes so far on services inflation had been that it actually had declined significantly. I think it was at 3.7, we had it. And so what that means is that if indeed that link between services inflation and inflation expectations is strong and is what it was in the past, we should see inflation expectations come down. Inflation expectations have been coming down, and they are at their lowest in 10 years. And the direction is right. It has been slow, but we would like to see these inflation expectations anchored closer to the midpoint of our inflation target range. Ashok asked the question, why have we over-predicted inflation over the past 3 years? If you got it right, Ashok, congratulations. All that I can say to you is that we have done this study, and last year in the monetary policy review, we compared inflation outcomes over a longer period than the 3 years that you had referred to, where we compared inflation outcomes relative to what our forecast was at each one of our meetings. And the mean square errors from that study actually showed that we were within the range compared to many other forecasters. So, of course, you could pick up this thing. You picked up 3 years. Somebody could pick up 2 quarters, and another might pick up 1 year. The bottom line is that we are dealing with forecasts here, and economics is an imprecise science. And we looked at these things, and we have got no doubt that the kind of work that we have done with respect to our forecast is comparable with the best around the world. What's our estimate of FX pass-through? We have been working with a coefficient of 0.2 over the years, and that is in line with many other emerging markets. What is in no doubt, though, is that after the global financial crisis, many of these long-term relationships have actually changed. Everyone says that the inflation pass-through has come down. We also are of the view that it has come down, but how far down, we do not know as yet. It's not something that we could say confidently, we think it has come down to this level. And many of the inflation surprises that we had also seen have also been fed through the exchange rate. You ask the question, is it symmetric? It is definitely not symmetric. And given that, it just makes it even much more difficult when you say pass-through has come down and maybe we must revise it down. How far down do you go, given that these things are not symmetric? GDP growth, you say that many experts have got lower forecasts than we have. There are more than 1,000 experts in the Reserve Bank, and their input went into the forecast that we had actually presented. And I think that what we are actually spelling out here is that the forecast range is actually quite dispersed at the moment across various forecasting houses or institutions that publish any forecast with respect to the economy. We have revised our own growth down, and we've actually identified that there are still risks to that outlook, that if those risks materialize, growth might actually come less than what we have actually placed on the table. And as far as we are concerned, if those risks do not materialize, we are confident that we will get the 1% that we had actually placed on the table. That deals with the MPC. We can move to the non-MPC questions. The appointment of the governor and the appointment of the deputy governors is the preserve of the president, including any reappointment that might take place. There is a process spelled out in the sub-act that must be followed to appoint a governor or a deputy governor. And that process had been followed in the appointment of the ones that are here and the ones that preceded us. I have got no doubt that the president will stick to both the spirit and the letter of the law and follow that process. And he must be given the space to make a decision on whether he reappoints, and if he has to fill that other, because he has to fill the other vacancy, who he is filling that vacancy with. And it just happened that it also coincided with this busy period, but the president is the appointing authority and he must be given the space to exercise his mind and tell us what his decision is with respect to that. Olang. Independence of the bank and whether the sixth administration can give us certainty. No, we do not need certainty from the sixth administration, the fifth administration, or the seventh administration. The independence of the bank is enshrined in the Constitution of the Republic of South Africa. That is the certainty that we need. What we are then left with as functionaries of the central bank is to protect that independence and act according to the prescripts of the Constitution, which is to act without fear, favor, or prejudice. That is our task as the functionaries of a central bank. The mandate of the bank is spelled out in the Constitution. Our task as the bank is to pursue that mandate in the interest of balanced and sustainable growth in the Republic. We have got that certainty. I do not need anybody to reassure me and say to me that yes, we will maintain the independence of the central bank, as if they have a choice to do otherwise. The independence of the central bank is in the Constitution of the Republic of South Africa. Ladies and gentlemen, thank you very much for your attendance. That concludes today's proceedings.